Dan's a fantastic man. He really is.
Ladies and gentlemen, please welcome.
What's up, everybody? It's Dan French. It's Tuesday. It's a French Workbench podcast, as always, on a Tuesday. Starting a little bit late. Apologize about that. We had some traffic. Everybody's running in. Couple of accidents coming in on the 215. So kind of set us back. Guys, this is the most real behind-the-scenes information regarding financing, real estate, money talk, entrepreneurs here in Las Vegas. And I'm your host, Dan French, streaming live. And we have a full show for you guys today. We have a lot of information. We brought back Brandon. He's a credit analyst, credit services, if you want to call him. He'll help you and answer some questions on that. We got Rich Salas back. So let's get right into it, guys. We're going to talk a lot about credit. We're going to talk about investment properties and how this is becoming a big thing here in Las Vegas and also across the country for investors buying homes. So Brandon, what's up, man? How you doing?
Hey guys, happy to be back.
Yeah, dude, what's going on with you, man? How's life?
Oh, life is good. Life is good.
Yeah,
I'm wearing my Vegas Knights gear. Got to support the local team.
Dude,
right?
what's up with the Vegas Knights? Then you got the Blue Jays. Is that a Blue Jays hat?
Oh, it's a Blue Jays hat.
It is a Blue Jays. Are you from?
I think I've just committed a Cardinal sin. You're not supposed to represent two teams at the same time.
Are you from Canada? You are.
Yeah.
That's all I know about is the start.
Born and raised. Hey, that's the only baseball team we got. I got to support somebody up there, right?
Yeah, man. So what about the Raptors? Are you a Raptors fan too? Or?
You know what? I'm not huge into basketball, but if I did have a team, it'd be the Raptors, of course.
Yeah. So you're not a big basketball fan. What about football? You got a football team?
Raiders.
Oh, Raiders. Oh, you're a bandwagon Raiders guy, huh?
Of course.
Okay. I like the Raiders, man. What happened yesterday, though, right?
Oh, yeah.
Dude, it was kind of
what's happened for years now.
Yeah. Rich, what's up, buddy? How are you?
I'm doing great.
Good, man. Yeah. What's going on with you, buddy?
The almost all of the flooring has been replaced in the downstairs from our flood.
Oh, how
so
nice.
I'm really happy about that.
Yeah, man. So what happened with you? You had a flood?
Yeah, well, the washing machine overflowed. And
oh my God.
There were two other people home, but somehow they didn't manage to notice while it flooded half of the downstairs.
They didn't notice, huh?
Yeah.
They were having popcorn.
So when you walk home, man, you hear the slushiness going on in your feet, or was
No.
that?
I was
okay.
actually it was October 15th, so I was doing like 10 tax returns that day for clients. But I just and my car wouldn't start that day also, but. No, I just hadn't heard about it. By the time I got home, all the water remediation people had already torn up half the downstairs and stuff.
Dude. So what's going on with you, Esmeralda? What happened? You were late a little bit. You had a little bit of tardiness. So
I'm very
where did it all start, Esmeralda? Go ahead.
So
Just wait.
I left work and then I had to go to my house and I had to close the door for my guys that were installing my flooring. So,
No, there was a couple accidents though,
and
right?
there was 2 accidents.
Yeah, dude, I'm telling you right now, Las Vegas is a busy city now.
And then there was
is
only
crazy.
one lane. Like trying to exit past Stephanie, there was only one lane. It was
Yeah, so it's kind of crazy. So we got a lot of good information. We want to get right into it. So I think the big problem out there is a lot of people still have challenges, right? They have challenges on understanding what to do with their credit, what they should and shouldn't do, what would actually help their credit, and overall, like what is the position that they're in. And, for me, I have a simulator, right? So if you have people out there that need help with credit, it's always, well, Dan, what can you do for me? I say, well, let's do a credit simulator. Let's see what we can do to get your score up. Now, what Brandon does at ECredit, what is it?
ECredit
Advisors. I was going to say solutions. ECredit Advisors. You take it a little bit further. So let's explain you and how you got. So how did you get into being a credit services rep?
Well, so my background's in finance. I graduated with a finance degree, and I've been in investments. That's what I did before the credit piece here. But I actually moved. So I am Canadian from Canada, and I moved down to the United States, and I work with ECredit now, which is my cousin's company. He actually owns the company, and so he started the company back in 2004, and niched it inside the mortgage industry. There's a lot of fly-by-night companies with regards to credit repair out there, and so. What happens is there was a space for us to really enter the market to help actually service people with the objective of being able to get a home loan. So it's tied to a result instead of people just saying, hey, I need to fix my credit. Okay,
Correct.
Perfect. Let's just do whatever. Challenge some accounts, see how it goes. If we don't get successful, then hey, whatever. We're tied to the solution, right? Which is helping people either refinance or purchase a home. And
a lot of people, what they do is they go through a challenge like themselves, right? They're like, you know what?
Yeah.
When I was younger, I wasn't always the most responsible with my credit. You know, I was out there buying big TVs and going out like, dude, I'm living it up. You know, credit cards maxed. I'm going to parties and stuff. And, you know, all of a sudden you go and look, you know, a year later and all your credit cards are maxed out and your credit drops.
Yeah.
And so there's some times where you have a medical bill that has a late on there. So there's been definitely some experiences and some learning lessons for me about credit and about just how you position yourself. So let's talk a little bit about you. Have you ever been in a position where you actually had to learn from a mistake like that?
Yeah, totally. And we were talking a little bit about this sort of before the show. And I think probably something everybody can relate to is when they're younger and they're first really getting into the financial world where they're managing money themselves. Maybe they're lucky enough to have a parent that knew a little bit about it and they said, okay, I'll add you as an authorized user on the credit card. We'll build up some credit for you and kind of go that path. So they have some knowledge going into it. But I think for most people, that's not the case. For myself, it certainly wasn't. I got a credit card. Whatever credit limit, I maxed it right out and I kept it maxed out forever.
Yeah.
and eventually I'd pay it down and then I'd get a credit limit increase. So that would go up. And my perspective at that time was that it basically counted as good as cash, right? So you have a credit limit of $5,000. I looked at it like, hey, I've got $5,000 I can spend, right? Mm-hmm. Which is the wrong way to look at credit cards, right?
Right.
If you want to flip that perspective, you really want to look at it as a tool to be able to show that you have the capacity to borrow $5,000. And so when you're trying to do something like purchase a home, then they're going to look at that. Loan officers like yourself will look at that and say, hey, you've got capacity here to take on more credit because I can see you've already got this you're under leveraged on these accounts. You know how to use credit, right?
Yeah, I think too, it's like, you know, when you have your situations where people are getting credit cards and things like that, it's kind of exciting. Right, it's almost like buying a new car. You get that first credit card, and you're just like, I want to take that thing for a spin.
I was so
I want to drive out. I want to swipe that thing. You know, and so you look at credit in general, and there's a way to be responsible. Now we deal with a lot of people that sometimes are irresponsible. Let's be honest, or have some challenges, maybe extend themselves. Yeah. And I feel there's a lot of people that just get discouraged altogether. You got people that are, you know, 550, south of 550 credit score.
Sure.
We're looking maybe a year, right? Before sometimes they get back on track. You know, 500, good luck, right? 500 credit score. So you look at the situation. Yeah, I mean, you look at the situation and I look at people and I say, look, here's your blueprint. If you can't follow this blueprint, I got a coach. His name's Brandon. Brandon's going to coach you on what to do. I mean, that's really what it is. Like, let me coach you and see what you need to do.
So here's the thing, just to add to that too, and we talked a little bit about this on the last show that I was on here, but credit is not a question of if, it's a question of when. And it's a formula that calculates your credit score. And so long as you know what that formula is and what to put on your credit file so that your credit scores go up as opposed to going down, that's really where we connect the dots for people. And I think a lot of the people will approach us, they initially get into their credit, they've got bad credit, right? They know they've got bad credit and they get overwhelmed with what they need to do in order to fix it. You could read at one site, it tells you some advice, another site tells you another, other advice. You might have a consultation from somebody who might be an expert and they tell you one thing and another expert tells you something else, right? So like one of the things is when somebody comes to us for credit assistance, if they're already working with another credit repair company or they've got somebody coaching them on their credit, we're going to tell them to stop working with that person because you don't want to have competing, advice on your credit. It could totally screw things up and make things that much harder, right? And so I think people just get overwhelmed. But to give hope to people, it's not a question of if, it's a question of when, and that's where we're experts at, right? So we'll teach you what to do in order to get your credit scores up to a point where you can do whatever you want to do, whatever your goal is, purchase a home, buy a car, whatever it is. Those probably the two biggest things that people are trying to do, right? So,
yeah, and I think too, a lot of people are really, let's talk a little bit about the motivation behind it. There's a lot of people that have credit problems and their motivation's just not there, and they just lose altogether. Like, you know what? I'm so far gone. Why should I even try? Right. Yeah. And I think there's a point where if you have, look, everybody has a position where they can get reestablished or get a second chance. And it sounds cliche, but it's the truth. I'm going to tell you though, 8 out of 10 people that do a credit application with me that need services. Yeah. 2 of them take advantage of it. 8 out of the 10 probably just let it go.
That's true.
And I don't understand. Look, if it's like me, I don't go to the gym all the time. Yeah. But if I really wanted to become like somebody that can work out, bodybuilder, really in good shape, I'm going to go get a trainer because I don't know all that. I don't know all the details and stuff. Similar with you, right? Yeah. You need to get a trainer. You need to get somebody in there that can say, look, we're not going to overtrain you. We're not going to tell you to do things that's not going to be there for you. We're going to tell you the quickest path to get your score up.
Yeah.
And I think that's the important part of it. And that's why I don't understand why people really don't take advantage of it. It's a free service from my end.
Yeah.
But I mean, you guys, how do you guys get paid on this stuff?
Yeah, so I mean, there's a bunch of questions, and I like your analogy of comparing it to the gym. I used to work in a gym in another life.
Right.
And so your analogy with regards to personal trainer, I was not a personal trainer, but I worked with personal trainers, and the value that they pitch to a client is not, hey, let me teach you all these different exercises.
Correct.
It's let me hold you accountable
That's
for when
it.
you have the days that you don't want to go to the gym and you're thinking about skipping it. I'm going to call you right then so that you get your butt to the gym and you're going to work out. Credit repair kind of works the same way. We initially, when we're talking with a client, we're doing a consultation with a client, we are very clear in that conversation with the client. It's not just, hey, let us take your credit file on. You sit on the couch, eat potatoes, and don't do anything. Like, it's a proactive system, right? It's 50% our efforts, but it's also 50% your efforts. If we're challenging accounts, we're fixing your credit, we're teaching you how to establish good credit, and you're going out there and you're just getting brand new late payments, or you're going and you're buying a car and your goal is to buy a home, that stuff has negative implications to your credit. So you're working against yourself, right?
Right.
So,
Let me ask this question. So, Rich, have you ever been in a position where you've actually had poor credit or made a poor credit decision?
Absolutely. When I was, like 19 or 20, I got a credit card, and then I got another credit card.
Yeah.
And I think I got a third credit card, and I was pretty good about spending and paying and spending and paying. And then my parents gave me this credit card that they were like, we don't use it. It's got a huge limit. Go have fun or whatever.
wow.
We were in better financial shape then, anyways. But I went out and I spent a lot of money, and I spent a lot of money on things that I didn't need, especially like clothes and electronics, concert tickets, things like that.
felt like a baller probably.
Yeah,
right?
Yeah.
You were just
and
spending.
and I looked at it like, well, if I have all this, I have like, I don't know, 20,000 in combined credit with my 3 cards. And I looked at it like, that's $20,000 I can spend. And when I max them out, I'll just make the minimum payments and I won't be able to use it anymore. And so I looked at it like, I've just got a whole bunch of cash, and I went and spent it and eating. Oh my God, I spent so much money on like sushi and alcohol.
See, and that's the thing, man. You got all that at your fingertips, right?
So,
and it's
so
crazy.
then I was making minimum payments, and then the economy fell apart, and I couldn't really pay them off. And I ended up like using all of my student loan money one semester to pay off like a $20,000 Citibank card. And then after I did that, they immediately canceled my card. And I thought I was going to have a $20,000 card back. And
Yeah.
they're like, no, you're done.
No.
So then I actually lost all my credit cards. Right after I got out of law school, I wasn't able to get on my student loans, so I defaulted on those for a few months.
Wow.
And so I had really bad credit for a while, and I think my credit score dropped to like maybe like 600, 590, something like that.
How'd you feel? Did you feel like you lost hope a little bit?
I did. And I mean,
Yeah.
it was hard because we were going through the financial crisis also. And
Wow.
so there was a lot of other things going on. But I had no credit cards anymore. And I'd had credit cards since I was like 16. And I always had lots of credit. And so it was very hard for me to suddenly be like, I can't just go buy shit when I'm having a bad day.
Absolutely.
So then of course, what I did was I got all my student loans out of default. I got a secured card from Capital One, and I started using it responsibly, not as something I just had just to have, because I actually needed to have it sometimes, gas, whatever, things like that. And I use Credit Karma. I think Credit Karma is a great service. It's free.
Yep.
I check it all the time. And I did go to this. I was talking to Brandon in the parking lot. I went to this place called Lexington Law that they work with, and I paid them some money for a while.
To clarify, we don't work with
No, not you. Sorry, Credit
That was a
Karma.
great plug, though.
Yeah.
Go ahead.
Sorry.
Just like,
Credit Karma, but
it's all good.
they got a bunch of what they did do for me though was there was like when you have student loans, you don't just have like one. I had like 50, so I had like 50 different creditors saying I had made late payments.
Well, listen, the mindset, though, of people out there that have student loans, it's a good thing that you brought up, is that, well, if I want to become this person that I want to be in the future, let's say it's a doctor, lawyer, whatever it is, well, my family's not rich, right? We don't have money. And what they're saying here is that if I want to become that person, being successful in the eyes of everybody else and really achieving my goals, I need to have 5 to 10 student loans, right? And it's like, well, is that really a good thing to do? Is that wise to do it? Now, if you don't have the money, what's your alternative, right?
I think that's debatable nowadays, right? I mean, I feel like it's kind of interesting, the student loan topic and just public education and just sort of the educational system in general. I took out student loans. I got my degree, right? And I think it's because of the societal constraints that are on people. You want to have that degree to open doors for you. But people like Elon Musk nowadays, right? Like he's famous for basically saying, I don't really care what's on your resume. I don't care if you went to university. Can you do the job, right? And I'm hiring for attitude. Companies are becoming more and more, I think, leaning towards that way. Now, if it's a professional career or something like that, different story. You have to have a professional and you need to have that educational background and training and everything. But in general, like I've got a business degree. Is it really super relevant now? No. I mean, I've learned things like finance, time value, money, like all this kind of stuff. But I could probably get along with my life without that degree. You know what I mean? So
let me say this. Do you guys feel that getting a degree though, like that, and maybe using and utilizing debt or credit to get some type of education, that still in this day, you still need it though if you want to become a profession like that? I mean, you would agree, right?
Yeah, I do agree with that, but I think it's only because society recognizes it. What I see happening is a trend right now where there's a lot of entrepreneurs. I'm talking about like the Grant Cardones of the world, the Ty Lopez's of the world, like people like that. I think education is going to start more veering towards the private sector. I do. I honestly think that.
Tell me, that you look at Grant Cardone and he just like flips something 3 or 4 different ways, but it all comes out in the end the same. But it's always like, do it this way, and then all of a sudden he flips it and he's like, no, don't do it that way. Do it this way.
Who does that?
Grant Cardone.
Cardone,
It's like he'll tell you to do something one way. He's a motivational.
He was a car
guess,
salesman who got into real estate and is super wealthy.
I have a question for you.
Yeah.
So what if you had like a credit card? Let's say that you have a couple credit cards and you don't have any debt on them, but you want to close them out. Would that hurt your credit?
100%.
Really?
Yeah, because you lose the history of those cards, right? So kind of general rule of thumb, if you have a credit card open, keep it open. Like even if you've got a couple late payments on that card previously, like it's going to hurt you more to close that card out. Just keep it open, make sure you're staying current and keep a low balance on it.
I mean, I don't have any lates or anything. I've always had great credit, but I was just curious. I was like, what if you don't want that many credit cards?
So you've never had a late in your life? Come on.
No, I did. When the foreclosure happened, I lost 2 homes four homes.
So you had foreclosures.
Yeah, it's worse, right?
It's a little bit different.
I when the pandemic went out, I was working for a title company that went out of business, and so I was floating my homes financially with my money.
Okay.
For like a couple years
so
until I ran out.
You didn't foreclose, or it did go to foreclosure?
No, I did. I ended up foreclosing on 2 when I short sold, and so that really ruined my credit. Yeah. Like it was horrible. It was like 600 or something.
Yeah. I mean, you look at this situation now with credit, and it is important. It's always going to be important. Now, we did talk though a little bit about this before the show that cryptocurrency is now going to, it's being backed by some credit cards, right? So you're starting to see that more, and that's something to talk about because. Imagine that. Imagine you have cryptocurrency credit card and you're going out and you're using that. So, I mean, how does that typically work?
So, and this is going into sort of the veering in the avenue of personal opinion and everything, right? So I'm definitely not an expert at cryptocurrency. But I study it, I know about it, and I've got my own opinions of it. I do think in the future it is going to play a bigger role in things. I do think that eventually, like we were talking about, if you sell a cryptocurrency, it's a capital gain, right? And so there's tax implications that have to do with that. So the laws and everything have to change around it. There's no credit card that exists now that is cryptocurrency where you're exchanging cryptocurrency, but there are credit cards now that have Visa sponsorship and everything, where basically your reward system isn't cash back, but you get rewarded in cryptocurrency. But you're paying in cash, right?
You're paying in cash, yeah.
And so there are cards like that, and I think you're going to start seeing more and more and more of that stuff. Actually, kind of interesting, not necessarily to do with cryptocurrency, but just sort of with how things are changing. I saw this advertisement on Facebook the other day talking about a credit card for influencers, and they don't check your credit to give you a credit line. They check how many followers you have.
Wow.
And they give you a credit line based on how many followers you have, because they know it translates to whatever income.
So more money, because now it's like circulating. Now people, isn't social media just crazy right now? I mean, everybody's got a podcast.
I never heard of that, but that's interesting.
I just heard about this the other day. I read it.
I mean,
crazy.
It is crazy though. But
I heard that joke about everyone has a podcast. And I was like, I don't have a podcast.
I don't either.
And I'm like, wait, now I do.
Well, I had to jump on the bandwagon too, man. I had to get a podcast going. Wait a second, I'm losing out.
Everybody's doing it.
Yeah, everybody's doing it. So let's go down the road of like some of the questions that somebody would ask you on credit. Now, people typically go to you and say, okay, Brandon, I need to get help. I have these things that need to get deleted. What's the biggest or the worst credit score you've seen?
I mean, I've seen credit scores in the 300s.
Wow.
Yeah.
It takes a lot of work to get there, to be honest with you.
Yeah.
it
have to
takes
try.
effort to get there.
You
Yeah.
have to try to credit.
I mean, we
I mean, that's
typically-
like compounding, right? That's compounding negative debt, problems with collections and right.
You're probably in a situation where you need to declare bankruptcy if that's your credit
Wow.
score. More than likely. I mean, if your score's that low, I can tell you immediately right now, you've got things in default and things are hemorrhaging on your credit. And it's more than we're going to be able to help, right? You're
Right.
going to need to probably do bankruptcy.
If
or
anyone
something
needs a
along those lines.
bankruptcy attorney, I should do bankruptcy.
Yeah, there's your plug, right?
Right, there's your plug. So let me say this. So where do you break off? Like, okay, I'm a credit services person representing anybody, right? But
Yeah.
it's like, okay, 400, 450, 500. Where's that breaking point?
It's going to depend on the file, right? And what types of accounts are on the credit report and what's affecting somebody. So for example, and this is a true story without revealing too many details about it, but I had a client that came the other day, saw their credit file. I've actually seen a couple of these, more so recently than I do on a day-to-day basis, but I think I've probably seen 3 of these files in the past few days here. But it's people that are currently in default on things, over-limit credit cards, and rolling late payments on their credit cards. Unless you have something specific from the creditor essentially saying, hey, like this is a mistake, this shouldn't be reporting this way.
Right.
Those are not going to get removed from a credit report, right?
Uh-huh.
So you need to really, really buckle down and get yourself under control and hopefully you can keep the credit cards open, but you really want to get those accounts paid down so that at least you're under limit, you're not reporting past due, and you stop the hemorrhaging on the credit report, things like late payments. And so I have seen a lot of those in the past couple of days here. Those are things that we cannot help with, again, unless there's something specific that's happened there and we could prove it essentially, right?
Sure.
But yeah, I mean, so that's part of the reason why we do a free initial consultation with a client is because we need to see what's in a credit file. It's one thing to say, hey, I've got, a 500 credit score. The question we would have was, well, why is that a 500 credit score? Is it because you have a bunch of collection accounts? Yeah, we can address those. We can help you with that. But if you're currently hemorrhaging on the credit report and you've got, all these past due balances and stuff, it's gonna be tough to fix that, right? So
let me say this. So you're out there, and if somebody's saying, you know what, how do I utilize, we'll talk about a credit card, we'll talk about other things as well, but you have a credit card and you barely get it. You go out there and you're like, okay, I want to make my first purchase. Do you make a small purchase?
Yeah.
Or do you make a big purchase at the first time and then pay it all off at once in the same month?
It's a great question. So the only thing that matters from how it reports on credit is what the credit bureaus see. And so we'll tell clients, and this is kind of secret tip of the day here, is when you get a credit card, what is not printed on your statement is when the creditor reports to the credit bureaus. So whatever credit card you have, you can call that credit card company and ask them when they report to the bureaus each month. They'll tell you. And then what we usually instruct and coach our clients on is, they'll say it's like a secured card, $200 credit limit. Just go out there, make a small purchase, like a tank of gas, $30 to $50, and then pay it down to a $5 balance and try to get that $5 balance to report to the credit bureaus. What you're showing is that you're under leveraged on the card, but you're actively managing it with that $5 balance, and you're going to get more scoring power out of it with that small balance than if it was a $0 balance. And so if you ideally want to do that across 3 cards. 3 is kind of the magic number there, because that's going to allow you to show that you could responsibly manage multiple accounts at the same time. Now,
trade lines is the same thing, right?
Right. Yeah. Now, if it's not bad to go out there and use a card, say it's $200 credit limit, spend $200 on it. But if you can get the balance down again to a $5 balance when it reports to the bureaus are never going to know that you have the card maxed out, right?
Yeah,
and so all that matters is when it reports to the credit bureaus. Now, you could also be the same type of person where you max out, you pay it off to 0 each month and think, hey, this is great. But when it reports to the bureaus, you're maxed out on the card every month. That's all they'll see, right? So that's bad for your credit then. So it matters when it reports to the bureaus.
I didn't know that.
Yeah, I feel like a lot of younger generations, they're looking at credit as like, I don't want to get in the game. It's like,
People
no,
are scared of it.
They're scared of it. And also, too, they don't believe in it. Like, it's like, well, you got to play the game to buy a house. Well, maybe I don't want to buy a house, right? Or maybe I don't want to buy something like a car. Yeah. I guess the thing is that are you starting to see people that are younger generations saying, you know what, I'm just going to bypass using credit altogether? And is that good or is that bad?
Well, so there's lots of people that pay for everything with cash, right? And if they're flush with cash, lots of cash, they go to a loan officer and they're trying to buy a home. Oh, you have no credit history. Well, what do you mean? I buy everything cash. I've got a great history. And they don't understand, right? You got to show you know how to use credit to get credit. Credit ultimately is just a measure of risk, right? And so as a loan officer, somebody who's going to finance you, how am I supposed to know how risky this loan is if I don't have anything to prove?
How do you fix that? Like if somebody's trying to buy a home and then everything gets cash, like is there a time frame that you have to season the money?
I think it's easier to fix no credit than bad credit, actually.
Well, there's nothing negative on it. You just have to establish credit, right?
Right, but if you don't have anything on credit that shows that you you're on a monthly basis or you made payments of any sort, then how do you prove that?
You get a couple credit
You
cards.
go get some secured
So-
credit
secured
cards.
Oh, so you have to physically get credit cards
Yep.
and then wait and build them? Oh,
Yeah.
God.
So But if you can do
takes-
that in
it takes
6
three
months,
to it
right?
takes 3 to 4 months for you to build enough history on there for them to pop your credit score. So
That's
your
not
score
that
show.
bad.
No,
I mean,
not at
that's
all.
really, in the time stream of things, that's
Yeah.
very doable for a lot of people.
Yeah.
But I mean, how quickly can that raise your score? I mean,
So
elaborate. I don't understand how that would work.
For sure. So after 3 to 4 months, it takes that time in order for the credit scores to show up on the credit report and to start positively helping your credit. They're typically going to pop probably around 620, 640, somewhere in that neighborhood. It takes about a year of seasoning on the credit cards, the way I said. So 3 cards, pay it down to $5 balance, do that every single month. And then after about a year, you're going to start getting your scores up into the 700s. And so it takes time to build credit to that level. But from a home financing standpoint, and we do this all the time, right?
Right.
Loan officers send over a client, say, hey, like we're trying to get this person finance. No history. They just got to get 3 secured cards, season them this way, 4 months, pull credit, you should be good to go.
Yeah, so you look at the credit situation, and you said that you were working with somebody, that example you were giving us.
Yeah.
So how long did it take them to get out of the position they were in? Like, how many, was it a year? Was it a year and a half? Or was it right away? Because everybody's different.
Yeah.
Is there ways where if you have a 450, 500 credit score that you can just come in and say, I'm just going to go in and go to town and I'm going to knock everything out, right? And I'm going to jump to a 650. I mean,
yeah.
is that really, is that even possible?
So there's a process that has to go on there, right? And it's not just as simple as, hey, I know I've got some collection accounts, let me just pay them all and boom, my credit's going to be fixed. It doesn't really work that way, right?
Sure.
As you know. And so different though when you're trying to do like a rapid rescore and you do your what if and it says, hey, if you pay this collection account, you get it deleted and you get a letter from the creditor stating that we can fund your loan. That's perfect. That's a solution that you have there, right? A lot of the time I'll work with loan officers and we'll kind of, spitball back and forward what could be done in that situation. Okay, here we go. We have a game plan and now you can get funding. But there's a bunch of accounts. And I had somebody like this the other day too, where they went through another program. They spent 2 years through this program, paid this company $150 a month for 2 years. Nothing was done. Immediately I was like, well, why'd you pay them $150
Right.
a month, right? But spent 2 years with this company. They have tons of accounts, like, $2,000, $3,000 collections. There's probably 30 of them on the credit report. And now they're like, well, maybe I'll just start paying all these. I'm like, no, don't do that. Like, you're going to be in the cycle forever if you're trying to do that, right?
Yeah.
So there's a process that has to take place. We have to challenge those accounts. We have to try to leverage the laws that are available to us and hold the bureaus accountable for what they're reporting. And so if those accounts are in violation of any of these consumer protection laws, or if we don't get a response back from the creditors, they get removed from the credit report. And so there is a process that takes place there, and there's some exceptions to that. And there are situations where I'm going to say, hey, you're better off settling this account, or like if you have an account that's currently in default, you got to get current on that account right now. You're trying to prevent it from charging off, being sold. So.
Do you guys have like a target score for most people? Like when you work on a file?
So that's going to come from the loan officer. I mean, 640 typically, but at the same time, it's going to depend on the loan officer and what loan they're trying to do for the client. And so,
Yeah, we got a question here. I want to talk real quick. It says, how will your credit score be affected when you co-sign a loan and the lead person is irresponsible to timely payment? Pros and cons of co-signing a loan.
Bad.
Yeah, that's
Cyrus Pinoy. Thank you for that question. Go ahead, buddy.
Thank you for
Answer.
that question. Yeah, so you're on the hook for that. You're a co-signer on it. You're equally as responsible for that account as the person who's supposed to be making payments on it. So a lot of the time what we'll see is when people are married and they get divorced and the divorce decree says, hey, this account is separate, it doesn't matter. The creditor has a signed contract with both your names on it. It doesn't matter what the divorce decree says. So if it's on your credit, it's on your credit. So you got to get that account current.
Well, let me say this, though. I mean, okay, so they're saying, would you even consider doing it?
I mean,
as a person, like for me,
No.
I'm not
that's a more-
co-signing anybody
Yeah, yeah.
because
Me neither.
No, I would
look,
not.
everybody that's ever asked for me, okay, it could be my kid, and I might have to have a strong consideration for that, right?
Sure.
He said his kid.
But other than that, I'm not going to put anybody with my name on that loan
Yeah.
because the problem is nobody's going to take care of your credit like you take care of your credit.
Yeah.
And I mean, would you advise anybody that says, you know what, jump on this card or jump on this trade line because if you do that, it'll jump your score right away. Do you ever advise anybody to do that?
You got to understand the risks of it, right? Like you can have somebody, let's say a credit card, you can add somebody as an authorized user of that card and not give them a card, and have
Right.
them run up your credit score, but they can still, ride on your coattails for it. So that way there's no risk at all on that side. But yeah, if you're co-signing an auto loan or something, then yeah, you got to know what the risks are with that. And so if that person doesn't make their payment, you are on the hook for it. So.
But it can help, like you're saying, if you were like, okay, so like my niece is going to turn 16, I'm probably going to buy her a car, And I was gonna get her to get a loan with me, so it's like a cosign thing. But I'm gonna pay the bill for her, but it'll help her build her credit.
Yeah.
But it's not for me. It's the cosign. I mean,
So I mean, you're responsible for it. You're having oversight.
Yeah.
on it.
Like
so
I'm
you're
not gonna let her pay.
You're
the bill
taking the responsibility.
So my credit's fine, but I know it can help her build her credit if she's on the loan.
Yeah. I think there's a misconception out there for trade lines, and let's talk about revolving credit, right, versus installment loans. And I think people think that installment loans are the way to go, and they're going to just report, and you're going to have great credit. And you might down the road, but that's not really an intended purpose to actually generate credit, especially right away. Is that right, Brandon?
Yeah. So revolving accounts are the better way to build credit. And the reason why is because there's no end date to revolving credit. Kind of answering your question earlier, saying, hey, if I have these credit cards I just don't like anymore, do I close them? You don't want to close them. You want to keep them open because the longer you have those cards open, the better it is for your credit. Whereas installment loans, like an auto loan, right? Anything you're making regular monthly payments on, when you first get that account, you're going to, and again, hot tip number 2 here. So when you get an auto loan, the best way to get this from a credit perspective would be to purchase the vehicle. A lot of people will go and say, have a $5,000 down payment on the vehicle. They'll put that down at the time of purchase and then get the car with that down payment. But what's better is to finance the car 100%, put the $5,000 towards the loan after the fact, because if you do that, you're showing, let's just say it's a $25,000 loan, and then you pay $5,000. You've got $20,000 outstanding on a $25,000 loan. You're already optimizing the balance to the starting balance on that loan.
Right.
That helps your credit. Whereas if you just get it and you have 100% financing on it, you're maxed out on that account. Now, as you pay that account down through the life of the loan, it helps your credit. The downside is when the loan gets paid off, it drops your credit score again because you lose all the positive payment history on it.
Yeah.
So
really?
That's the downside with installment loans is you could have a 6-year note and through 3, 4, 5 years, right, you're doing really, really good. It's helping your credit scores. You're thinking, hey, I'm just going to pay this off. It'll knock it off my credit. It'll be really good. And then all of a sudden you do that and your credit score drops. It's because you lose the history of that account.
I'm going to bring something up. Okay. You have a question?
Yeah. So, okay. So if you have a car note and you decide to pay it, it backfires?
Yeah.
Oh my God. So like, what if you just don't have any more cars? Like you're done paying the note.
Well, so pay it off. You got to do what you got to do, right? But just understand that that's going to result in a drop in the credit score, right?
I had no idea that happened. I don't know. I've always bought my cars cash.
So we talk about younger generations, and they're really changing the landscape, right, of how people think and the traditional ways of doing things. You know, a lot of people are turning to cryptocurrency to hedge against inflation, right? Yeah. You're looking at a lot of people that don't want to get into loans, big loans, right? Because they feel like they're married to something like that. It's a big responsibility. Same thing with credit. Now, I feel that, you know, maybe 10 or 15 years down the road, we'll still do loans, but is it going to be the same landscape that we've had over the last 10 or 15 years that I've been doing it, right? And I don't think it's going to be that way. Now, what about for you with credit? Do you ever feel that credit is ever going to go away at some point? Because it's something that it's judged by risk, right? And that's the reason why you have it.
Yep.
But is something going to replace that, let's say, in the next 10 or 15 years?
I think it depends on how you define what risk means, right? And so, you know, it goes back to what I was saying about the influencer cards that are out there. That would have been unheard of like 2 years ago. You know what I mean? And now they've got this thing where you can get credit cards just based on how many followers you have.
Yeah, I mean, so does that discredit it, though? Like, discredit the whole position of
I would imagine that's still a pretty niche market.
And rare,
so,
right.
Yeah.
So, but it's new, right? It's something that's new coming on. So it's a different perspective. And so, yeah, I think credit's always going to be around. It's going to change probably and how things get recorded or what is deemed important on the credit. But things like late payments on your obligations, yeah, it's going to affect you. I think
it's going to affect you, yeah. I mean, but just I guess the mindset for me is that credit's important. I just don't know that I think people don't take it as important or look at it as important as they possibly did maybe a few years ago. And I'm not saying it's needed, right? It is needed.
Yeah.
But for me, it's just I don't know. I think they're always looking for alternate ways of paying something. You got the younger generation; they're looking for that quick, fast dollar. You know,
they're not always going to be the younger generation, and things happen. And like credit cards are like a vital thing for most of us. You know, I mean, we don't run out to Dollar Loan Center and get a $500 loan. You just use your credit card and then pay it. You know,
I don't use my credit card at all, hardly. Like I used it on purpose because I had to build credit.
Yeah.
Because I was one of those. I paid everything cash. Once I lost my houses, I learned.
Yeah.
And I was like, I never want to go through this
again.
Yeah, because when you don't have good credit, I hate to say it, but you get treated different.
Oh yeah, I mean your
Like,
car
you're
loan
not-
That's a good point,
interest
Esmeralda.
Right?
It is true though. You do get. I mean,
You get
People
treated
think you're
different.
irresponsible.
Yeah.
Yeah, they're like, this person doesn't ever pay. Like, they don't really know what your scenario is. They just know your score looks like a certain way, and it's
Employers
not.
run it.
well, I treat people differently. I mean, you got a 740 score, you're getting top tier pricing. Right?
So
You get a 680, you might be riding coach. You know,
I had this client I was doing a consultation for the other day, and she's one of the these people that's totally overwhelmed with everything. And we were in a conversation doing the consultation. She was so frustrated at the end of it because she's like, oh man, she's like just overwhelmed, right? I think how a lot of people are feeling with it. She's like, man, I feel like just because my credit's bad, everything's more expensive. I'm like, well, yes, that's true. It gets reflected in your interest rates and everything. It gets reflected in what you get qualified for. 100%. It affects so many things, but credit's kind of out of sight, out of mind, right? If you're not trying to purchase something like a home or a car, then typically you're not going to think about it. If it's already bad and you're like, oh, well, I'm a renter for life, you're never going to think about it again, right?
Yeah.
And so there is hope. It's just you got to be able to address it. And it's...
So let's talk about this. How many people you think track their score like on a consistent basis? Do you think there's a big, I mean, when you have people come in, are they like, hey, I got these apps and we're tracking them like every day or every week?
I would say in my experience, I would say more people than I would think that, I would say the majority are looking like Credit Karma. For sure.
Yeah.
Credit Karma is the biggest one. It's a free
I have
service.
to.
And most people know where
use
their
it all the
Credit Karma
time.
scores are.
Now, is that algorithm off though? Because I know a lot of people.
My credit scores
it's
are always
inflated.
actually higher. No,
Yeah.
Credit Karma, they're always lower. Like both times.
Lower?
Yes. Like when I went to lease my car, and then when I bought it at the end of the lease, and they ran my credit, and they send it to you, and then I just refinanced my car loan, and same thing, they do it again. My credit scores are always about 20, 25 points higher than what Credit Karma says they are.
So the couple notes to make about this. So Credit Karma only reports 2 of the 3 credit bureaus.
Right.
If you're trying to get like a home loan, you're going to pull all 3 credit bureaus and you're going to use the mid score, right? Whatever
Correct.
the middle score comes back as. It's not always, so it could be the scores are higher there, or it could be that they're lower. It just depends on what information is reporting. Things like late payments hit heavier on like a mortgage report, right? So your scores are going to typically take a big hit on that. But if you have pretty good things, but you got high balances, that kind of stuff, depends on what report you're looking at. So, but there are different scoring models. So you got to take it with a grain of salt. Yeah, you could have situations where the Credit Karma scores are higher. Most often they're not though. And so people will go into see a loan officer and say, "Hey, I've got a 700 credit score." Right. Loan officer pulls like, "Oh, no, you got a 580." So
have you seen that off from like someone's
it
credit
happens.
tracker? Okay.
Yeah, it happens.
I think Americans are rich in things that they don't need though too, right? Because I mean, I'm out there and I'm like, hey, do I really need this, or I'm going to buy this? I'll tell you the truth. I'm a sucker for electronics, as you can see. Like, if I get something like I'm on Amazon and I'm like, okay, do I need this? No, but I might need it one day, right? I think I'm going to put this on the side and I'll figure out and invent a way to use it. Do you think Americans do that? Do they actually just buy stuff that they really don't need on a consistent basis, and it puts them in a position? Have you seen that with people?
100%.
Okay.
I'm guilty of it.
This is Vegas.
Hey, stay
Sort of
off
built
of
on that.
Amazon. You'll start finding everything.
Dude, so I started using Amazon in, I think it was like 2015, 2016. I never used it before that. I'm hooked. Everything's at my fingertips. Anything I ever want is at my fingertips. So yeah, I want a buying spree. I think people do that totally.
But I mean, it's weird because it's like, I think, you grow up, and like for me, I grew up and we had things, but it's like, wait a second, I can really get this now, and it's like, maybe I get this thinking in my mind that maybe I won't ever be able to get it again for some reason. I don't know what it is. So I just like, you know what? Here
That's
comes
your
the card.
excuse.
You know what I mean? I swipe the card or I put the digits in. And for me, I don't know. Like you try to scale back and you try to be smart and responsible, but I think it's hard because, we all know cost of things are going up. Yeah. And you look at things and you're human. You want things. You see something new. When the Apple 13 phone came out, I was right down there. You know what I mean? Ready to go in the line. So
and Apple's like the masters at that, right? I mean,
Oh my God! Every year is a new one,
The
and you're
first
like
$1 trillion
behind.
company.
Yeah. And you know what? And I look at it and I go, nothing's changed. But you know what? I got the 13. I look at it. Maybe the camera's better. Okay, that gives me a reason.
Just fine. 12 works.
I'm not.
Fine.
That's like a $1,200-$1,300 bill. Like, so I'm like,
Well,
I'll stick to my little
I think you look at the
Meanie.
credit.
last year. I'm good with the meanie.
It still works. It's a smartphone.
So going back to credit. Okay, so we have people that maybe have a 660 score, 680 score.
Yeah.
They don't need a lot of help.
No.
Why is there usually people that come in and they're like, hey, how do I get 20, 30 points? First off, can you get a 20 or 30 jump on a score? Let's say if you had a credit card and you paid it down, or if you deleted an account, is that something that's possible?
Yeah, it is. So I guess this is where your what if simulators really come into play, right? Because you could have somebody who's rated on the fringe, and your what if simulator shows, hey, just pay down this card to this balance, pay down this card to this balance, and then you've got this collection here. If you can get this deleted, your scores pop right up, right? But yeah, no, 100% that could affect you. And here's the thing, like the better your credit is, as soon as you have something negative, the more it's going to impact your credit negatively, right?
Right.
So, you know, you could have a 740 credit score, you get a new late payment, boom, your credit score just tanks because of it, right? It's super relevant because it just happened, it's recent enough, but you know, if you've got bad credit, you've got a bunch of collection accounts, obviously you get a new one, it's like, let's just add it to the pile, right?
Right.
So, but the dates on those accounts matter, right? That's how your credit gets measured, is the dates. The more recent stuff is, the more relevant it is to your credit scores. And so if you've got a bunch of collection accounts and they're all 5 years old, and then all of a sudden you get a brand new one, that brand new one collection accounts can impact you way heavier than the 5 from 5 years ago.
Oh my God. So I had to late you guys on $24 on a medical, even though my cycle score was 800.
$24?
$24. I don't even know for what.
So
Wow.
No, but I didn't know for what. I was like, what is this? I didn't know what it was. It was some medical thing, and I was irritated. I was like, I want this thing gone.
Can you get that deleted, Brandon?
Yeah, I mean, you should probably try to do a pay for deletion on that. Just call the collection company. I'll pay you. Just delete it from my credit report and get that in writing. But yeah, we would challenge
So
that.
they delete, like if you needed to get something deleted, now is there different levels
Like,
of
does
deletion?
it really get deleted though?
Well, no, here's what I was
You
saying.
get it in
say
writing
pay
from
it
the
in
credit,
full.
but you're paying it. So
yeah.
You know, don't settle it for less, right? I mean, you want to pay it in full if you
I want to
can.
settle, man, for
Well, there's
$12.
some-
Yeah, I'll do $12.
Right?
50%. Yeah.
There's some
$12.
credit agencies out there, though, that if you do get a collection for, let's say it's for a medical bill, that they will delete it. Now, there's other collections out there that won't get deleted.
100%.
But you
Which
look
ones
at
are
the medical
those?
bill or the medical field, and if they give you that, you can get that deleted pretty much anytime,
They're
right?
the easiest types of accounts to get deleted. We understand we can't guarantee deletion of any account. Literally against the law for me to say that. But medical collections are the easiest types of accounts to get deleted because of laws like HIPAA, right? That we have available to us to be able to challenge them.
Sure.
So on the grounds of this law, you're in violation, right? So,
Yeah.
But what kind of collection accounts don't go away when you pay them in full?
So it's going to be dependent on. So if we're thinking charged off, like things like charged off credit cards, you can challenge charged off credit cards, but really what you're trying to challenge in those situations is the legitimacy and the accuracy of those accounts, right?
Okay.
Now, if they're inaccurate, then they can get deleted off the credit report. But if they're legit, we go through this process, it's found out, yeah, they're legit. Like they're not going to go anywhere off the credit report. The best you can really try to do is try to get some sort of settlements or a paid offer on it and essentially clear off the charged off status on it and to fix it on the credit report. But
Right.
it will not entirely get deleted, right?
It'll show paid in full though
Yeah.
now, so I mean,
Correct.
it will still improve your credit, even though it'll show that you
Correct.
had a delinquent account
Correct.
at one time.
So you going back and we're looking at all these different factors. So there is a way to jump your score 30 points. There's also a way to get things deleted, but not every account, not every trade line is just going to open their door and say, hey, yeah, send us the letter and we'll get it removed right away.
Yeah.
You probably, they have to still, CFPB and you said all these, they have to still report. It's got to be something that was negligent, right, on the consumer.
I think for a lot of it is the collection companies. So if you have a collection on the credit report, you understand like these are sales organizations, and usually you're talking to a salesperson on the other end, and they want to get paid. And so if what it takes, let's say it's like a $2,000 collection account, they're looking at like, yeah, we want to get the $2,000, no problem, we'll delete it. A lot of companies will do that, but other companies will be like, yeah, no, we're just not going to do it. We're going to stonewall you. You're done. Like they've got all the leverage there, right? And so. The best they'll do is like, yeah, you'd settle it, but it's going to still report. We could challenge it. But.
I got a couple of questions for you, actually, that's happened to me. So first off, I want to ask the algorithm. Everybody always calls me and says, hey, I checked, we got Credit Karma, we have this, we have that, Experian. Why are the algorithms always different? What is up with that?
So
because everybody gets all like worked up
Yeah.
and it's like, no. When I pulled you credit, it's completely different because we go more conservative.
Yeah. I think it's more so you got to look at where you're getting the credit scores from for what you're trying to purchase, right? Because auto credit scores are different than mortgage credit scores too. Consumer scores are different depending on where you look at them. There's over 50 different FICO scores themselves, right? So somebody sees a FICO score like, oh, that's my mortgage score. Well, not necessarily, right? There's tons of different FICO scores. Why that is, it's going to be specific to the type of financing that you're getting. But if you're looking at Experian.com, they give you an Experian score, and then you get your loan officer pulling Experian, a different Experian score. You got it. Whatever you're trying to apply for, that's where you got to get the credit score from. But
Wait, you're saying that when they run your credit report, you get a different score if you're trying to buy a car than if you're trying to buy a house?
yeah, 100%.
It's all about different algorithms, right? I mean, that's where they come in, and I think it kind of confuses the person out there with the credit, because it's like, wait a second, I had Credit Karma, I checked here. Last time I checked my credit, it was a lot, 20 points. Dan, you're pulling my credit and it's 30 points less. What's going on?
Yeah.
Why is this happening?
I don't. That seems a little strange though, that you
it would be
have
cool
a
if-
different score on the same information based on what you're trying to get a loan for.
Yeah, from
I
the
didn't realize that.
from the same bureau.
Yeah.
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 Because I know there's 3 bureaus, but it's like, well, but we could give you 80 different scores today.
Correct.
Based in wow. Okay.
So back in my day, I was a guy that had a credit card that, like I told you, Esmeralda and everybody, I ran up the credit card, right? And it was about $900.
Join the club, man.
Yeah, right. I
900,
bought a
that's
TV
nothing.
and I
Oh
was
my
rolling and I was like, I got things happening. I was buying clothes. And, I got to a point where I didn't pay the credit card back, right? And I was young and I was like, you know what? They ain't going to do nothing. I got this, you know what I mean? 4 years later, they call me and they say, hey, okay, now the bill's $1,500. Now they have a collection company that's trying to get paid too. So I said, I'm going to keep kicking that can down the road. Nobody's going to come after me. I'm just going to let it go, right? So I think it was like 7 years later, I get a random phone call, right? So apparently I think it got charged off. I'm just like, you know what? I'm just going to out of sight, out of mind. I don't know what happened. And they start calling to collecting on that money still. Now it's over $2,000. And I'm sitting there going, isn't there a time limit on how long you could come after me for this stuff? So what is that time limit? Like, when does that stuff just go away and you don't have to
Wait
worry
9
about it?
years
Or does it ever happen that
No,
way?
it does. Yeah, it's statute of limitations, 7 years for most items. Bankruptcies are different, but it's 7 years, right? And so a lot of the time you'll find collection companies, they use scare tactics to try to get you to pay them, right? So, 5 years down the road, they're like, oh, it's $2,000 now, pay us now. Again, it's commission sales, right? So give us our money. If you pay them, you're pretty much screwed then, especially if you don't know, you should try to get a deletion agreement on it, right? So you just give them $2,000. Boom, you just reactivated that account. You paid it, shows $0, but now it's brand new on the credit, it drops your credit score. And so you're out $2,000, right? So yeah, having a little bit of know-it-all, kind of like how to deal with this stuff, yeah, it's important because it affects your credit, right? But this happens all the time to people, right?
Yeah.
And they're like, oh yeah, I know I owe that account. Oh, the balance is just going up. They're never going to stop hounding me. And these collection companies are really good at what they're doing, right? So
yeah, you know what I did, right? I mean, it's like they call and it's like, hello, is this Dan? Yeah, this is Dan. Okay, Dan, we're trying to collect on $2,000. Oh no, Dan's not here. Dan went down the street. He'll be back. He went to the store. All of a sudden you're MIA. You know what I mean? So.
Yep.
We all been through that, but I think that there's got to be a time limit of when that could get dropped off. You said it was 7 years?
7 years, yeah.
7 years. Now, what about a bankruptcy? What if you have a significant credit impact, like a foreclosure, bankruptcy, something like that? When does that fall off?
So 10 years for Chapter 7, 7 years for Chapter 13. Bankruptcies are really, you really can't get those off the credit report. What you could challenge is if you've got accounts that were included in bankruptcy and they haven't been zeroed out on the credit report, so you're already discharged, everything's good that way, but you've still got accounts reporting with a balance on them, then we could leverage the different schedules in the bankruptcy to challenge them to get those fixed. But the bankruptcy itself, staying on your credit report for 10 years.
Shirley's got a good question here. She said, does a credit simulator require a hard inquiry? Now, you pull credit, hard inquiry, boom, right? Yeah. Now, what about the credit simulator?
Simulator won't, no. You're basically, what's your software called that you use for the credit simulator? That comes from the loan officer, right? So we don't use a credit simulator on our side.
Well, we use CBC Innovis, right? And they have their own credit simulator inside of their network. So we use that. Now, I've never seen that it ever affected their score, but it's cool because people are like, well, if you don't want to pay money, you got a game plan, because now it's like, okay, I'm going to run scenarios, right? Just like you.
Yep.
You're going to run scenarios, and then you're going to advise based upon what you think the best position is for that client.
Yep.
But you take it a step further, because now you're like, well, this is what I advise, but I'm going to hold your hand through the process, where I'm just going to say, take the simulator, call me in 6 months, good luck.
Yeah.
I'm not going to say that, but I'm just going to say, I'm not going to be calling them every month going, hey, did you pay off that credit card? Or did you delete that? Or, are you up to date? Did you get that credit card down below 25 loan to value on the card? You're going to do that.
Totally. Yeah. 100%.
Right.
Yeah.
So let's talk a little bit more about somebody that's seeking your advice or your information. How would somebody find you, and how would they seek your, to find you online?
Yeah.
And the other thing too is I don't think I've ever asked you, how long have you been doing credit service? I think we talked about it, but is there?
So we've been a business since 2004.
Okay, that's what
our company's been around for a long time. I've been doing it for 5 years now.
Okay.
Personally. Yeah.
Personally.
Yeah.
And you just one day you're like, hey, you know what? This is for me. I stepped into the light.
You know what? It is a natural
light.
fit for sure. I mean, I don't know why I'm kind of a dork. I guess I've always had a passion for finance and numbers and stuff, right? And never really considered the credit market. I was more so on the investment side. That's what I was doing up in Canada. And when I moved down here, my cousin was like, well, you try credit repair. I'm like, okay. And so I got into it, and yeah, I love it. It's awesome, right? And I think it's probably just because so many people are affected by it. It applies literally to everybody, you know, and it's something that everybody can relate to. And so it's super relevant.
I think it's highly elevated as far as how people perceive lending credit, because why? It's emotionally involved with people, right? You're dealing with money. You're dealing with something personally that they have to deal with, right?
Yeah.
And I think that's an issue where you start to see things where people just start to get very secluded, or they get very, just kind of like, I don't know if I should trust this person, or, should I go forward? And I think that's a big thing that people don't look at is trust is a problem, I think, with credit services. I really do.
Oh, I
think so.
100% agree.
Every time
Absolutely.
it's like, should I trust this guy? I mean, he's dealing with my credit, right?
Yeah.
Well, your credit's a 600. It's a 550. Let him deal with it. I mean, it's already in bad shape, but I just feel that people it's hard to extend somebody to say, hey, I'm going to help you with your credit, or kind of go with somebody like that, right? I mean, would you agree?
I think now, like, kind of with the age of the internet, so to speak, and you could find everything at your fingertips, I think that helps a lot with the trust factor, because you can do a lot of research, right? Like, I'm sure people that I'm talking to on the phone as I'm going through a consultation, they're literally looking on Google, like ECredit Advisor, reviews, Better Business Bureau. And we are very, very proud of our reputation online, because we do have a ton of reviews online, all very, very positive reviews, both from partners and then from clients that have gone through our program, who've had success in the program. And we've also got A+ rating with Better Business Bureau. We are one of the very few credit repair companies that have that, and we have made an exerted effort to be able to get that, because it's such a murky space. There's a lot of fly-by-night companies. There's a lot of companies, even big companies, that take advantage of people. And because you don't know any better, you don't know who to trust. And they've kind of got all the cards, and like, oh, you're trying to buy a home. Yeah, I know you got bad credit. We're just going to take advantage of you, and kind of, it is what it is, right? What are you going to do? You don't know, right?
Dude, I'll tell you a story about that. So I had a guy, I was working at a company, right, when I first got started in the business. And I was just kind of learning the ropes, and they're like, hey, send the people over to this guy. So this guy comes in, he's got tattoos all over his body, and I'm sitting there looking at this guy. I go, this guy's a credit services guy. So I'm like, okay, maybe he knows his stuff. Maybe he knows his shit. Yeah. So I'm sitting there looking at him. I'm like, all right, whatever. So try this guy out. So about 2-3 months later, all of a sudden everybody's calling in, and you're getting all these complaints. I'm like, dude, what's going on? So this guy collected like from 4 or 5 different people, disappeared. I think he went to Mexico or something. He was gone. No joke. And that really did happen. And I'm sitting there thinking, now I understand why people are, one, credit's just sensitive to people.
Yeah.
You're dealing with people's money. That's emotional.
Yep.
And then people get scammed.
Yeah.
Like, why would you not want to check that out? You know what I mean?
Yeah.
Now, you guys obviously are different. I'm just saying it is something that people are going to be a heightened alert on as far as looking at companies to work with.
Yeah.
So, and other than that, also too, I wanted to say that when you're choosing a company, do people really look at the reviews? Because I think they do, right? 100%.
100% I do.
Yeah,
absolutely.
Do you guys have solid reviews on your guys' website?
You check them out right now. Go for it.
Let's check it out. So let's bring up.
Let's hope nothing pops up.
No, but and the other thing, just like another note to that, like 95%.
Let's bring this up. What is it?
So
Go ahead.
ECreditAdvisor.com.
www.ecredit.
Yeah.
Advisor.
Yeah.
Okay. Hopefully I'm spelling this right.
.com. Yeah. And
Did I do it?
Can I ask you a question
Oh.
while he's
Oh no!
looking this up?
You can look up ECredit Advisor reviews too, and you should be able to.
Let's do this. eCredit Advisor reviews. Let's see if we can get this up here. eCredit Advisors.
Advisor.
Okay. Wait. Hold on.
Let me ask you a question about something you were saying a few
Let's
minutes
see if
ago.
it
Yeah,
comes up.
far away.
So if
There we go. Look at this.
if you got an old loan,
Hey, there you go, man.
and
You got a
pay
picture
it
on here?
off, and even though I think I was trying to ask it earlier, but they still
Yeah.
So it's gonna report that you paid it off.
Yeah.
So is that gonna? I mean, that should help you more than
A+ right there.
Or the fact that they report it again now because you didn't do anything with it for several years. That could hurt you more than just paying it off.
Sorry, are you talking about something that's like a positive loan that you pay off?
Like let's say you had like an auto loan and you let the car get repossessed and it was a bad whatever credit agreement, but you had like a $5,000 balance.
Okay.
And you don't do anything for like 4 years or something.
Yeah.
And then you're like, oh, I have money now and I want to pay off some of these old debts that are still on my credit report.
Yeah.
But they haven't been reporting for a while because
Yeah.
you stopped like 4 years ago.
Sure.
So then you call them and you go, I want to pay it off.
Yeah.
And they go, sure, great. But then they immediately report to the credit bureau once again that you've got this, a negative account. Now they've added more interest because you've called them and talked to them and like reopened it.
Right.
But paying it off would that still be the best thing to do?
In that scenario, that would hurt your credit score.
Okay.
It's because of the age of the account, right? So it goes back to the dates of last activity. If that account's 4 years old and then you put brand new activity on it, even though you're paying it to zero, it looks like a brand new derogatory account. A paid repoed vehicle is going to drop your credit score.
Okay.
Yeah.
So let's take a look here. Oh, you know what? My my camera froze. Let me see if I can do something here.
You get $50.
So I'm just going to
off.
come on this side over here.
Yeah.
So I'll just talk off this camera. So basically what I'm looking at here is that you look at your situation with credit, you look at the things that's going on with people out there. So there is a way to get this done. We're going to transition to another topic, but I mean, if somebody wants to get a hold of you, what's the best way to get a hold of you?
So you can reach out to us on ecreditadvisor.com.
Okay.
There's a button right at the top of the page. And
$50 off for the first month.
Boom, you can pop that in there.
Look at that.
You request a consultation from there, or you can just give me a call, and you can pop my number in the chat there if you'd like. But
Absolutely, man. So let's take a look at something else. So I want to take a look at, right now we have a situation where investors are coming in, and Esmeralda wanted to bring this up, so I want to talk a little bit about investors. Investors right now are coming into this market, and they're coming in very big, coming in with a lot of money, and they're coming in and buying investment properties, even though we know that these properties are appreciated quite a bit. Now, we talk about year over year. Across the country, it's been 15% year over year as far as appreciation on homes. You look at rents, right? Rents are following right behind that. 10% across the country increase year over year. Vegas, year to date, 18%. I think we're at 15% on rents year over year. So why is this happening? So you look at this, and we're going to look at this right here with this right here. I'm going to bring this up. So this is the investor report. And what's amazing is that she's broken this down where we have by each zip code what investors actually come into and buy, and the percentage of investors and what markets they're in. And Esmeralda, do you have a little bit to talk about this? What is that?
So it must be an Amber Alert.
Oh, it's an Amber Alert.
Yeah.
Wow.
oh yeah, wow.
Wow, that's crazy.
What does that mean?
An Amber Alert?
It's in a different state.
It means
No, it's a
somebody's
kidnapped
missing.
Kid. Yeah.
So
Okay.
what do you have to say about this?
so-
I want to kind of get your take on it, of why you brought this to my attention, okay?
The reason I brought the investor report was because it's really significant right now. So if you were to check, we'll just say Zillow.
Yeah.
But in the MLS, there was only 1,000 properties about maybe a month and a half, 2 months ago. There was only 1,000 properties available for rent.
Okay.
That's huge. What does that mean? That means there's opportunity for anybody that wants to buy a second home to actually rent. You're going to rent this house.
Yeah.
Because there is not enough inventory to sustain the demand on the rental side, unfortunately. So that means that this is why we have groups of investors coming in, and they're actually looking into the market, because you have a great opportunity to, instead of making $1,800 in rent, you can get $2,200. Rent has significantly went up. And the report here clearly shows, if you go in, and it doesn't even matter what zip code, to be really honest, most of them, they've all went up. I mean, there's only
Well, look, you got investors that's coming in these markets. I mean, they went into North Carolina, they went into Georgia, Charlotte, North Carolina, Georgia, Phoenix, Arizona. Yes. They're going in hard, right? And the objective is that even
Texas too.
Even Texas, yeah. The objective is that even though they know that these markets are overinflated and these prices are consistently gone up, you still have big investors, and we talk about it all the time. But even so this third quarter,
yes,
they had an 87% increase year over year in this third quarter that we just passed versus last quarter. So that means they're in this market and they're in the
major
market.
Investors buying property.
The return's there, and I feel that this is just another sign that are we going to become a situation where, especially here in Vegas, that 75% of people are going to be renting, and there's only going to be 25% owners, and those 25% owners are going to be all investors, right? They're going to have rental properties, other things. I'm a little bit worried about that because I think the average buyer out there, the primary residence, secondary home buyer, is going to be pushed out. You got somebody who's paying cash. Why would you want to, deal with it, going financing or, whatever it is? I mean, you might get a better deal, but again, if you have investors coming in and they're purchasing homes at this clip, this high of a clip, it's a little astonishing to me. So if you go back, let's look at this situation here with these properties. So you look at 89002. And let's look at this real quick. 89002 is in Henderson. You got 89005. Where is that at? Do you guys know where that zip code's at?
Not sure.
Okay, 89011, 89014. This is all Henderson. So look at this market share of home purchases in Henderson, 66% home purchase. You got investor percentage that's going on in Henderson, 32% in 89015. That's in Henderson.
Yes.
That's a big number.
Wow.
Right? You go down and you look at 89. Let's look at 89135 if we can see that. Do we have 89135? Because that's,
Yes,
I think that's the
it's right
highest.
there. Yeah.
So look at, that's a very low percentage, and that's in Summerlin. So it looks like a lot of investors are going in the 89118. You got a lot of investors going in 89015.
Look at 891.
89032. That's 45% of investors. That's a big number.
It's huge.
It's huge. And what does that tell you? I think they're looking at properties that are maybe a little bit older, right? And they may have to have a little bit of work, but you know what? They're still going to go in, maybe put a little work into it, and they're going to still rent these properties. You're not seeing it in Summerlin, though. You're not seeing it in the new homes or the areas.
Summerlin is a desirable area, and most people actually own and live there. And another thing that you guys have to take in consideration, a lot of the phone calls that I've been receiving in the last, I want to say 4 weeks, has been from investors actually from California, that they're looking for properties that are, that they're older and they have land, or that they have another home or a garage that they can actually convert into a bedroom, or
right.
So they're looking for
Multiple
these.
income-producing
So these are the
properties on
kind
one
of farms
parcel.
that I've been creating quite a bit, and I've been seeing a lot of that, especially coming in towards the end of the year. And the reason is because we have that we still haven't. It hasn't been settled what's going to happen with people that haven't paid their rent. Mm-hmm. So we don't know where that's at. That's still floating. We don't really know if that's going to be extended or not. But these investors are ready. They're ready, and they're doing their homework, and they're ready to buy. So
do you feel like that's a problem? I mean, as far as your situation with, looking at people buying homes right now, primary residence, because I know you deal with a lot of people that are just trying to get, you probably don't deal with a lot of investors going, hey, I need to get my credit fixed.
No, not at all.
You know what I mean? It's like, if I'm buying an investment property, can I get a couple of deletion letters? I'm buying an investment property next week. So what do you deal with? I mean, you deal with first-time home buyers primarily, right? Or people that are trying to buy a primary residence?
Yeah, or refi, but yeah, mainly first-time home buyers. A little bit. So it's interesting because I read an article recently that was talking about private equity coming in and buying a lot of the homes that are typically first-time home buyer homes and driving up the price and everything. Like, that's going on pretty substantially right now, especially after COVID and everything that's happened. And yet somehow we haven't had a crash in the market. It's like, well, what's going on here, right? So all fingers kind of point to private equity and these investors coming in here. So it's interesting. Yeah, I mean, it's artificially inflating the market. It pushes, mom and pop.
Do you have worry for that? I mean, are you feel like you're worried that maybe in the next 2 or 3 years that I don't feel like it's going to happen, but do you feel that maybe investors are going to come in, but then
just rent everything
and
out?
just rent everything out? Because I think a lot of people are saying, well, why are they buying this many properties in an inflated market, and why are they connected to some of these builders that you're starting to see out there? So it's concerning.
It's a worry for sure. I mean, I don't know the answer to that, but yeah, I mean, it's concerning. I'm watching it. You know what I mean? It's on our radar. I hope that doesn't happen.
I know we talked about it on a couple of shows where, they really take a whole different approach to what the asset's worth and how long they're going to get money out of it. I know Matt's talked about it a few times because I guess he used to do some of that, but just that they don't look at it like the rest of us. They look at it like a 75-year asset and the appreciation and the rents and stuff. And most, real world people don't look at it something as a 75-year investment.
Sure.
But they definitely seem like they've taken up a big part of the market share. And what I was thinking is, I don't know if you remember what the nationwide homeownership percentage was in, like, say, 2008, when everyone was getting whatever they wanted and then the market crashed. but it was somewhere in like the 60%. It was like 64%, 65%. And I would really like to know what we're at now as a nationwide average, because I bet you it's at least 10% lower than that now.
Yeah, I mean, and too, like you look at a lot of the people, I don't think it really affected Vegas, but you got a lot of people that maybe, I wouldn't say lost their home, but they were going through the forbearance. You know, some people maybe just decided they wanted to walk away. I know people had that money go to the back end of that loan in some cases, loan modifications. Yeah. So there's a lot of things that could take place, but we don't know. I just think that it's something to bring attention to everybody, because these numbers are staggering to me. And I'm not saying it's, time to worry today, but if this continues down the road, I mean, you got a lot of people, there's a lot of places right now building apartments, right? There's a lot of places where there's, people that are buying homes even at a premium. I think they said like the average buying for an investor was like $438,000 across the country. Like that was the average home that they bought, average median price. So that's not a cheap home.
So how does this tie in? I think you did an episode on this a couple of weeks ago, so I don't want to delve too deep into it, but what's going on there with Zillow, right? And them basically offloading a bunch of that.
Zillow's a little different, because Zillow's actually was iBuying, right? They were instant buying.
Right.
We actually have companies like BlackRock and huge hedge fund investors and just long-term position and saying, look, the return on investment is going to be there. Why is that going to be there? Because they can guarantee that rents in this market, not just in Las Vegas, all these other markets and these, these cities I've talked about, they're going to guarantee that they're going to get paid those rents. So why not go in? Even if you're paying a little bit more, if you can jack the rent up and you know what, you don't have anybody that's going to say, hey, I'm not going to pay it. Right now we have a shortage. We don't have a lot of homes. And if you got rents going up 15% year over year, they're following suit just like they are with the average median price homes. I don't see it stopping. Now we could go through a small correction, but could it continue to go up? Yes, and I think that's what they're counting on. If investors thought that this market was going to tank or that there was going to be an issue, I think they would have pulled back. We wouldn't see this stuff that's going on. Redfin reported a lot of this information, right? So you're seeing a lot of this data, and I think that's something that we should definitely pay attention to moving forward. Everybody wants that opportunity to buy a house, and maybe in the future it might not be there. In the near future. We don't know. So something to look at. Also, I want to talk about FHA, and we're going to end the show here, but FHA fees, right? So we have upfront mortgage insurance premium. We have a monthly insurance. So they're talking right now about lowering the fees on FHA. Now, that's important because that's how FHA makes its money. Now, I don't know if that's going to pass, but that's going to help a consumer out there because that's less money. A lot of times you can pay that upfront mortgage insurance premium, or it's just tacked on top of the loan. So you're actually taking on a higher loan amount. If they do that, then it's just going to do nothing but help the consumer. And I think, with little things like that, maybe they come back and they give like a tax credit, maybe get people back in the market to say, let's buy. I don't know. I mean, there's got to be more benefit, but I know that right now, the two things that's alarming is home prices are going up. And you also, larger down payments, more money needed to buy these homes. So what does that mean? It's going to push those people out of the market. And then we just talked about renters. It's going to force people to rent. There's got to be more programs. There's got to be things to help these buyers out there to get them back into a house, because there's just not enough. They're on the sidelines.
FHA too, it sounds great in theory, but as any of us who actually work in the real estate industry know, that FHA isn't always one of the strongest loans to make an offer with, or the strongest financing. I mean, that's great if it does help some more people get into homes, but we've talked about it on this show a lot about how, like, this past year, you go in with an FHA offer against like 18 other buyers. Like, they're not even going to respond to you.
I think that's like, I don't know, like, that's not human to disqualify somebody based on the FHA. I mean, I know I get it.
It's just, I know it's been much hard. Like, I just know that, like, say 3 years ago, if you had an FHA loan, it wasn't like, oh, good luck. But this past year, for a lot of homes, it's been like, good luck, but you're going to make a lot of offers before you get an acceptance.
I think it's a stigma that agents put in their minds, though, of clients. And I'm going to tell you, I get what you're saying. So I'm not going to say that that's not the truth about that. But what I'm going to tell you is this, is that when you look at a situation where you're making an offer, as long as they're qualified, it doesn't matter what it is, in my opinion. Now, VA buyers, right? Veterans. Okay. They're saying, oh, they're harder to get closed, right? They're worse off because they're putting no money down. I'm going to say majority of the time they have the most capital, a lot, right? They're most qualified. Their credit's always stellar for the most part. I think there's a stigma out there that people think that going VA is not the way to do it. and they'll just say, hey, we're not going to take those offers. The same with FHA.
Oh yeah, I don't know
FHA
about
is the
VA.
same.
I haven't seen that so much, but FHA, I know specifically for some people, it's that appraisal thing where you get an FHA appraisal and you're stuck with it for 6 months, and they sometimes come in lower. And that I know is something that turns.
Well, that's the same across the board, though. Meaning, if you have a FHA loan or if you have a conventional loan, look, you have to have it for. Now, you can go to another company and get another conventional loan, but the thing about VA is if you need to go VA, I think the big thing is that they think, oh, well, it's going to take 2 weeks to get the appraisal back. I'm going to have to probably help them out with closing costs. No, that's not necessarily true. You know, veterans have money. I mean, that's just the reality.
Escrow, that's it.
Yeah,
and the termite inspection.
So if FHA gets this passed, I think it's going to help a lot of people out there. I really do.
I hope you're right.
But here's the thing about that: we need to have the county limit here in Clark County raise up, because right now it's too low, and the how fast these homes are appreciating. I don't think I've done an FHA loan in over a year. Like it's been over a year.
Yeah.
So I mean,
limit's low,
VA more forgiving. Why? Because they have a county limit that can go higher. FHA, it's tough. So the word on the street is that I know what's going to happen with conventional loans, that we're going to jump to 625,000 county limit for next year, right? Okay. So we'll see what happens with FHA. You know, I don't have the final numbers on that. I hope it jumps to like 400. You know what I mean?
At least, I mean,
yeah, I mean,
that's
right,
not even in line with the median price.
I was, yeah, I mean,
What is the median price?
The median price as of the October numbers were 410,500.
Okay,
Yeah.
so it did go up a little bit.
Yeah.
So think about that, and that's a good point. It doesn't even meet the average median price home.
Yeah, that's
you know?
a problem.
I mean,
that's not helpful.
It's like, so what do? I think you got to raise it to the highest it can go, maybe 450, because now at least it's exceeding the median price of a home, gives those people an opportunity. And guess what? That's 3.5% down, right? And that can open up doors for other people. I think it's something we need to look at.
That's great. The 3.5% down. I mean, that really does make home ownership possible. Again, though, as long as you can get a home with an FHA loan, which is more of a struggle right now.
All right, guys, we're going to end the show. Do you guys have anything to say to anybody out there as far as, let's go around the room here real quick. Thank you so much for tuning in. Brandon.
Hey,
Thanks for coming back, man. You got anything to say? How does somebody find you?
pay those credit cards down.
Yeah, man.
Look me up at ECreditAdvisor.com. You're able to submit consultation requests there. It's free. Or you could give me a call. Number's 512-900-4910.
Mr. Rich Salas, man, you're here every week. Soldier. What's going on, man? How does somebody get a hold of you?
www.attorneylasvegas.com.
Esmeralda, the girl that's always in traffic.
I'm always in traffic.
Always in traffic. What's going on? So what do you got going on, man? You got anything? So you're doing something on your house, right? The floor?
Yes, I'm doing the floor, the bathrooms, and so just remodeling a little bit, just updating it. So,
Yeah.
But I would say this, if you're looking for a home, don't think that there's not an opportunity. There is. And there is help. There's different programs. You know who to get a hold of. Everybody's here.
Call now. No,
Lots of help.
I'm going to the Golden Knights game on Saturday.
Oh, nice.
I have one ticket from me. That's it.
That's it. Just solo.
Nice. You guys check out lvhomeprofessionals.com. That's my website. Also check out Brandon. Please leave any comments in the comment section. If you have questions, Brandon's going to check this out. And hit that like button. Also subscribe to the channel. We're trying to bring the content. You guys are the ones that make the show. So again, we want to earn your business. Be grateful. Yes. And we'll see you guys at the next stream. My name's Dan French. I'll see you then. Oh, by the way, we're going to be dressing up Saturday for Thanksgiving. So you guys want to check that show out. I'll see you guys then.